Guys, welcome back to XRP Insider Network, where we connect the dots between global macro moves and what it means for your XRP before the mainstream catches on. Let's get into it. Here's what most people got wrong this week. They looked at XRP touching $1.50 and called it a failed breakout. They saw a wick, shrugged, and moved on. But if you've been following this channel, you already know that the most important signals in this market are never the ones screaming at you from the headlines. They're the quiet ones, the ones hiding inside regulatory filings, institutional flow data, and adoption metrics that 99% of retail traders never bother to read. And this week, every single one of those signals pointed in the same direction. Today we're going to break down what that $1.50 touch actually means when you zoom out to the macro picture, why the mainstream narrative is dangerously incomplete, and what the smart money is doing right now that you need to understand before this window closes. Let me start with something that almost nobody is talking about. On April 15th, the SEC issued a quiet but genuinely seismic clarification. Non-custodial XRP ledger platforms do not require broker-dealer registration. Read that again. The securities regulator in the United States just drew a line around XRP's native infrastructure and said, in effect, this is not what we regulate. That is not a minor footnote. That is a structural green light for institutional developers, for fintech builders, and for the entire ecosystem of financial infrastructure that Ripple has been constructing for years. And it landed with almost zero fanfare in the mainstream crypto press, which means the people who caught it, people like you watching this right now, have a real informational advantage over the crowd. Now layer on top of that what Rakuten just did. 44 million users, 5 million merchants. Rakuten, one of Japan's largest e-commerce platforms, just integrated XRP as a functional payment rail in a live consumer environment. That is not a press release. That is not a partnership announcement with a logo and a handshake photo. That is real-world transactional adoption at a scale that most blockchain projects have only dreamed about on whiteboards. When you combine a regulatory green light with a mass-market consumer adoption event happening in the same week, you are not looking at noise. You are looking at the early architecture of something much bigger taking shape in real time. But here's where it gets really interesting, and this is the part that ties it all together. XRP spot ETFs have now recorded consecutive days of multi-million-dollar inflows. Institutional money is not waiting for a clean chart signal. It is positioning now, quietly, methodically, in the way that large capital always moves, before the retail crowd even knows what's happening. That is the pattern this channel has been tracking for months. The institutional inevitability thesis is not theoretical anymore. It is showing up in the flow data. So why does the $50 price level matter at all in this context? Because the chart is where the macro story meets market psychology, and right now those two things are in direct conflict with each other. The resistance zone sitting near $1.53 is not just a technical level. It represents a massive concentration of holders who have been underwater for months and are now at or near break-even. Approximately 60% of XRP's circulating supply is held at an average cost basis of around $1.44. That means for every tick the price pushes toward $1.50, there is a wave of exhausted holders quietly hitting the sell button, not because they're bearish on XRP's future, but because human psychology doesn't care about 5-year theses when you're finally back to flat. That selling pressure is real, it is measurable, and it is the primary reason that one brief wick to 150 was not enough to break through. What the bulls need, and what the institutional flow data suggests is coming, is a daily candle close above $1.50 with genuine volume behind it. Not a wick, not a whisper, a body, a commitment. When that happens, and I want to be clear about the word when rather than if, the technical picture reorganizes itself dramatically. The $1.4840 to $1.53 zone flips from resistance to support, and the next meaningful levels that emerge are $1.71 and $1.83. Those are not random numbers pulled from optimism. They are pivot levels established by prior market structure. The staircase is built. The question is simply whether the bulls can land the first step cleanly, and if they can't hold here, Let's be honest about the risk because this channel never hides from uncomfortable math. If $1.50 continues to reject, the initial support sits near 142, with 140 below that. A failure to hold those levels reopens the path toward $1.22 and potentially $1.11. Nobody wants to revisit that territory. But here's the thing. Even in that scenario, the regulatory clarity from the SEC does not disappear. The Rakuten integration does not disappear. The institutional ETF inflows do not disappear. The macro foundation that Ripple has spent years building does not disappear because of a price retracement. That is the distinction that separates the long-term holders watching this channel from the traders who got shaken out at every dip along the way. A monthly close above $1.50 heading into Q2 would be one of the most significant confirmations of bullish momentum this market has seen in a long time. Not because of the number itself, but because of what it would signal about the balance of power shifting between exhausted sellers and patient institutional accumulators. That is the signal worth watching. Not the daily wick, not the 15-minute chart. The monthly close in the context of everything we just walked through. Here's what I want you to take away from today. The mainstream is telling you that XRP kissed 150 and failed. What they're not telling you is that in the same week, the SEC quietly blessed XRP's infrastructure. Tens of millions of consumers gained direct access to XRP as a payment tool, and institutional money began flowing back into XRP ETFs with consistency. Those are not coincidences. Those are the pieces of a much larger picture assembling in real time, and you are watching it happen before the rest of the market catches up. The people who built generational wealth in every major financial transition in history were not the ones who reacted to headlines. They were the ones who understood the architecture before the architects finished building. That is exactly where XRP is right now. The foundation is being poured. The regulatory walls are going up. The institutional tenants are signing leases. And the mainstream is still arguing about whether a wick counts as a breakout. Stay patient. Stay informed. And keep connecting the dots. Mike out.